Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock analysis on Nio. Is this Chinese-based electric vehicle company worth investing in right now? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and then finally, I'm going to give my buy, hold, or sell recommendation for both your long-term and short-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you like to hear daily stock reviews and recommendations for an unbiased source. So let's get right into it. So as always, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you get up to 12 free stocks by using my referral link in the description down below. All right, so what is Nio? Nio designs, develops, manufactures, and sells smart electric vehicles in China. It offers 5, 6, and 7-seater electric SUVs, as well as smart electric sedans. Now, the company is also involved in the provision of energy and services packages to its users, designs and technology development of activities, manufactures of e-powertrains, battery packs, and components, and sales and after-sales management activities. In addition, it offers power solutions, including the Power Home, a home charging solution, a Power Swap, which is a battery swapping service, Power Charger, a fast charging solution, Power Mobile, which is a mobile charging service through charging vans. They offer the Power Map, which is an application that provides access to a network of public chargers and the real-time information, and One Click for Power Valet service, where it offers vehicle pickup, charging, and swapping services. Now, furthermore, the company provides repair, maintenance, and bodywork services through the Nio service centers and authorized third-party service centers. Statutory and third-party liability insurance, and vehicle damage insurance through third-party insurers, courtesy vehicle services, roadside assistance, data packages, and auto financing and financial leasing services. Now, additionally, it offers the Nio Certified, a used vehicle inspection, evaluation, acquisition, and sales service. All right, so let's look at some of the news of the company right now that's hit the market right now. All right, well, there's some good news. Now, Nio is going to get ready to break into the European market. It's about to enter Germany's electric vehicle market on October 7th, marks the scheduled launch date for the new venture. Now, after weeks of market volatility among delisting concerns, this is definitely welcome news for Nio investors. Now, this delisting announcement comes at a time of heightened political tensions between the United States and China right now. The two countries have been struggling to come to terms with the ability of the American regulators to inspect the finances of Chinese businesses. Specifically, American regulators want to see audits of Chinese businesses listed on American exchanges like Nio is. Nio is listed on a U.S. exchange. Now, the U.S. and Chinese authorities have failed to come to an agreement that would allow American inspectors to access the audited financial results of publicly traded Chinese companies ahead of a 2024 congressional deadline. Now, companies that fail to comply with the U.S. regulatory requirements by 2024 risk forcibly being delisted from the U.S. stock exchanges. There should be an announcement, so don't worry too much. There should be an announcement on an agreement between China and United States audit requirements for the Chinese companies by Friday at that Federal Reserve meetings. Now, August 2022 has been a rough month for Nio Stock. Shares surged multiple times, only to just fall quickly again. While its declines of around 5% for the month could be much worse, though, the stock still has shed more than 40% year to date. So now that we know some good news of where the company is going to be headed, they're headed to Europe. Let's look at some of the fundamentals of the company right now. Let's see how it's doing from a fundamental standpoint. All right, so the company is currently trading at $19.98 a share. It's definitely up around 6% today, and it has a market capitalization of roughly 33.5 billion won. Now, the company is projected to have 60.7 billion yuan of revenue at the end of 2022, but they should have negative 7.1 billion yuan in earnings. Now, the revenues are projected to significantly increase over the next few years to around 144.8 billion won by the end of 2024, with positive earnings of 2.39 billion won. Now, it definitely has high growth revenue, and its increases 33.3% per year. Now, let's look at some of the key metrics regarding Nio and look at some valuation measures. All right, so because the earnings of Nio are negative, the price to sales and the price to book ratio is the most appropriate valuation measure. Now, when you're looking at the price to sales versus its peers, it seems like a good value based on its price to sales ratio of 5.6 times compared to that of the peer average of 17.1 times. And if you look at the price to sales versus the industry, it's a good value because the industry average is 13.2 times and Nio's only at 5.6. Now, when you look at the price to sales ratio versus the fair ratio, and this is the expected price to sales ratio taking into account the company's forecasted earnings growth, profit margins, and other risk factors. Nio is definitely a good value on that because we put the fair price to sales ratio of 8.1 times. So it's trading below that. Now, when you look at the share price versus the fair value by using a discounted cash flow model, though, it is trading significantly below the fair value price. The fair value using a discounted cash flow model is only $4.48 a share. All right, so looking at the profitability and numbers of this company, now the profit margin has been getting better over the past years from a negative 30% in 2021 to only negative 19.8% now. Now the earnings trend, now the company is currently unprofitable, but has reduced losses over the past 5 years at a rate of 17.7% per year. And like its peers, it doesn't pay a dividend. Now let's look at the growth of the company, and I know CNBC doesn't have the numbers over here. But although earnings at Nio grew over the past 12 months, they failed to keep pace with the growth in revenues. This may mean the company is being less efficient by using its resources. However, this result was better than that of the average company in the automobiles industry. Now, we have to say that the Nio is expected to become profitable in the next 3 years, which is a really important step to hit that break-even point. And earnings are forecast to grow 83.9% per year. So they have high growth earnings, and the earnings have grown 17.7% per year over the past 17 years. So they're significantly growing right now. And if we look at the financial strength of the company, now the Nio has more cash than its total debt. It's been reduced. Its debt to equity ratio, though, has increased from 8.2% to 50% over the past 5 years. But its short-term assets of 64.3 billion won exceed both its short-term liabilities of 31 billion won and its long-term liabilities of 17.8 billion won. It has a sufficient cash runway for more than 3 years based on its current free cash flow. So I'm not too worried about them diluting shares if they have enough cash runway to last about 3 years. But what do the analysts say specifically regarding Nio? All right, well, the average consensus is a buy recommendation, with 64% of people saying buy and 28% of people saying strong buy. Now, the average price target that the analysts put on Nio is around $34.92 a share, with a high being $66 a share and a low of being $25 a share. Now, if I go over a few of the analyst reports in particular, starting with the Street Quant Ratings, they have a sell recommendation on Nio, and they say it's driven by a number of negative factors, which they believe should have a greater impact than any of the strengths and could make it more difficult for the investors to achieve positive results compared to most of the stocks they cover. They say the company's weaknesses can be seen in multiple of areas, such as poor profit margins, generally disappointing historical performance in the stock itself, and feeble growth in the earnings per share. But then again, when we go over to the CFRA report, they have a buy recommendation on Nio. They think that Nio's electric vehicle portfolio expansion, 3 SUVs and 2 sedan models in 2022 will sustain a strong revenue momentum and drive an improvement in operating leverage. Now, with better operating leverage, Nio could tap into mass market segment for growth in their view. And Nio's battery as a service benefits from the government's support for battery swapping, with subsidies offered to buyers that help drive sales. As an early mover in the building out of the domestic swap stations in China, 949 of them by the end of May 2022, they think that Nio has an advantage in the evolving government's policy on electric vehicles, for instance, potentially standardizing of batteries across the EV markets, the EV makers, for compatibility with swap stations. So that means with the battery swaps that no matter what manufacturer you are in China, you're going to have to produce the exact same compatible battery that you can just swap out. So if Tesla wanted to go in there, you would have to be able to swap a Tesla in with a Nio battery. Now, the shares, it's listed as a Class A ordinary shares. These are fungible with the ADSs on the market in Hong Kong and Singapore to mitigate potential US delisting risk. So let me bring it back over here. So on my buy, hold, or sell recommendation on Nio, well, here are my thoughts. Now, today alone, shares of several Chinese stocks were trading higher after the Chinese government announced the new stimulus spending, which lifted investor sentiment out there. Anticipation of the Fed's Jackson Hole Symposium and reports suggesting that the US and China are nearing a deal to allow audit inspection of New York-based listed Chinese companies is also impacting the stocks, making them go up a little bit higher. Now, we'll all have to say that Nio is a leading electric vehicle manufacturer in China right now, targeting the premium segment. Nio will benefit from a vehicle electrification and consumption upgrade trends. Now, I see significant growth opportunities for Nio with the first profitable year of being around the end of 2024 into 2025. Now, Nio successfully established a premium brand in the EV market. It also pioneered battery swap technology as a supplement to charging. The launch of the battery as a service solution separates the battery pack from the vehicle, which cuts the upfront cost by 15 to 30%. It targets to build over about 4,000 of these stations worldwide by 2025, and about 1,000 of them to be outside of China alone. Now, I see rapid new energy vehicle adoption in China, stimulated by regulatory push and improving charging infrastructure, among others. By 2025, I expect passenger new energy vehicles, which that's what they call them in China, to account for more than 30% of the total passenger car sales in China. Now, China's new energy vehicle sector had a milestone in 2021 with significant sales growth, reflecting increasing consumer adoption driven by regulatory push and improving the charging infrastructure, among other things. Now, China sold approximately 3.3 million units of passenger new energy vehicles in 2021, which accounted for 16% of the total passenger car sales. Now, this suggests 1.7 times year-over-year growth compared to 6.5% for the larger passenger car market. Now, sales remained strong in 2022, up 1.1 times year-over-year. Now, it's forecasted that the new energy vehicles in China by 2025 to see a 4-year compound annual growth rate of 25% to 8.2 million units with 35% penetration, up from 16% in 2021. So in just a few years, there's going to be double. I foresee increasing consumer adoption for China's new energy vehicles, and with the forecasted Nio's vehicle delivery to reach over 410,000 units in 2025, up from 91,000 units for 2021. So 410,000 I'm projecting for 2025, and it's 91,000 that they produced in 2021. Now, taking about a 5% share in China's passenger new energy vehicle market overall. Now, the development of the new energy vehicle technology and battery density should result in higher profitability over the longer term. Now, despite raw material pressure this year, growing economies of scale and lower unit production costs could lead to an improved outlook for vehicle sales profit. Now, Nio successfully built its premium brand image, which will differentiate itself from its mass market competitors and generate extra pricing power for the company's electric cars. Now, advancing battery technology and charging solutions will ease range anxiety on electric vehicles. Chinese consumers' soaring demand for EV cars will benefit the new energy vehicle car makers such as Nio. Now, the younger generation car buyer vehicle tech experience given Nio leadership compared to legacy car makers. Nio enjoys several strategic advantages in the long term, including Beijing's recent announcement to support EV adoption and its leading scale domestically. In the near term, the business just posted 27% year-over-year delivery growth in July and passed the 10,000 monthly delivery mark. So based on all of that, I am a buy recommendation on Nio with a 12-month price target of $30 a share. Now, I'm a cautious bull right now. This is a highly speculative bet. It will take a few years for investors to see the true gain potential out of this stock. I would hold it for about 3 to 5 years to see its full potential. Now, I can sum that up by saying it's a high growth potential with adequate balance sheet for the next 3 years. But there's a lot of downside risks, so let me go over those downside risks. There's also a possibility that profitability might be pushed back from the lockdowns and zero tolerance to the COVID-19 that we're currently seeing in China this year. Escalating battery costs in the past 1 year will put Nio's vehicle margins under pressure. It will derail the industry projection of cost parity of new energy vehicles with internal combustion engines, affecting new energy vehicle adoption in the long run. Rising competition in the new energy vehicle market indicates legacy OEMs will defend their market share with aggressive new model launches. Nio's plan to launch a new mass market brand will impair its premium image and dilute the company's focus on the premium new energy vehicle segment. There could also be car safety issues and a loss of chip supplies. Nio currently uses the NVIDIA's chips, impacting revenue growth and higher investment spends, increasing net loss. But I'm not too worried about that. This is definitely a speculative bet. So, you want to roll the dice on this one. With the $30 mark on the increase, I think you'll see significant increases over a 3 to 5 year period. So there you have it, folks. And as always, don't forget to smash that like button down below. It definitely helps. And consider subscribing and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. Until next stock update video later today, folks. Ciao.